get down to business. Today is April 1st. April fucking 1st. Just got some pretty bad news. Found out we're about to be moving out of my current place of residence to another one for a couple days. But no big deal. Just gonna be out here, doing my thing regardless of the circumstances. So this video was recorded last night, which was Monday morning for New York. So yeah, here in Australia, at around 9 to 10 o'clock here is when New York opens for the morning session of the previous day. I don't know, it's confusing. It's kind of confusing, but this is yesterday morning, but it's this morning for you guys, or whatever. I really don't care. This video was pretty good. This morning was pretty good. I actually got burned real bad at the open. So I was trading pre-market, which was 7. Pre-market is 7 in the morning to 9 in the morning. That's pre-market because the opening bell is at 9:30. I know in a previous video I said that the opening bell is at 10 to 10:30. I was wrong. Well, I just said it wrong. It's 9:30 to 10 o'clock is the opening range. Opening bell is at 9:30. Pre-market is 7 to 9. I do have some videos of me trading in pre-market, and you'll see how how more predictable price action is, I guess, because it's not as volatile. It's more chill. It's just pre-market. It's just doing its thing. When the market opens, it can be a lot more volatile, and I tried for my first time ever to be in a position before the market opens. I got burned pretty bad. It was fast. It was fast. It dropped a lot of handles in 3 minutes. But I throw myself in those positions to really understand what the market does at the open, and how it feels to be in that trade, and how quickly it can turn on you when the opening bell comes and it just turns and rips and it goes. And if you're offside, it's gonna bring you down with it, brother. It's gonna bring you down with you. But yeah, I definitely didn't take it as a shit. I gotta plug my laptop in. No, this was really good. So yeah, the opening range, so on the open it dropped, right? And so that left the draw on liquidity for me to be up, go up. Price was down, it dipped down to a deep discount, and now my draw on liquidity is up. However, this is what seems to me, what I view this as is high resistance liquidity. So each PD array that I have outlined here, a PD array is just premium discount array. So you could just say premium array, discount array. But the broad term for it is PD array. You just say both in one. So when price is above a certain array, what's below it is now a discount array, because when price goes lower, it dips down into a discount. I just bought price at a discount because it went down on a closed candle, on a downwards candle, and my idea is that price is gonna go up, so I just bought at a discount. Discount, if that makes sense. So now I'm locked in 3 contracts, and you can see the numbers go up really high. Which this is my first time trading with 3 contracts. One second. So yeah, so now I'm locked in 3 contracts. And I'm pretty confident prices are gonna go up. There's a lot of stuff telling me. So you see the new week opening gap up there. The opening range gap is up there. There's a 15-minute discount or a premium wick now. There's a lot of stuff, and as well as the midnight open. There's a lot of stuff that convinced me price is gonna go up, but however, I do know this is high resistance here. How it's like bouncing from PD array to PD array, kind of like, you know, just chilling in between the PD arrays. That's how you can identify high resistance liquidity runs, which means like it's going to be a lot of back and forth. It's not going to be real volatile. It's just going to go up and down, and not really a market environment that you want to be in. One, because it's going to take a long time to get a result. See here, it trades to my PD array. It trades there, so that right away I take one partial off, because I mean one of my goals for price to hit is come to fruition. It just happened. I could have been more precise with the exit on the partial, but I don't care. I just need to take it off the table. As you're starting off, as I've said before, you're gonna want to keep, you know, like, take money off the table when you can. You know, like, there's no reason to hold on to everything, all the contracts up until, you know, it hits your target. You're not trying to be right here. We're not trying to be right. We're just trying to make money. And honestly, in trading, making money is a lot easier than being right. So you got to have like a serious conversation with yourself. Do you have enough? Are you humble enough to swallow your ego and not be like hit your target every time and make money? Or are you still, you know, just trading dumb? And I've already identified before that this is high resistance. So why am I going to be messing around trying to hold on to that much money, that much risk up until it hits my target? It just makes no sense. You might as well take a partial and you know, get your bag, secure your bag. That's what you got to do. You got to secure your bag. So yeah, price is just kind of not really excited to go anywhere. It's kind of like chilling. I still really like how I managed the trade here, though. You'll see in a second some of the things that I do, some of the things that I kind of wish I didn't do. But either way, the one thing, see how it kind of rejects there? I mean, I don't like that. That's another sign of high resistance. Like it's showing me price isn't super strong. It isn't super duper bullish. It is bullish. It is going up a little bit, but it's going to be high resistance, and that's not an environment I personally like to trade in. Nobody really likes to trade in, and it takes a lot more experience and a lot more confidence in your trading models and execution to hold on to these types of days. I mean, it wasn't a terrible trading day. It definitely was not. It definitely wasn't, you know, like a high impact news driver week where it's all fucked up, where it's super volatile or super sluggish. It wasn't bad, but I would still classify this as high resistance, which can make it difficult for new traders like myself, or even someone who hasn't found themselves in an environment like this in a long time. The sooner you can identify that it's going to be not super easy, the easier it'll be to manage your risk and manage your trades. So for me, I'm actually finding a lot of growth in the fact that I'm trading without real money, because it's kind of like taking the whole money factor out of the game. Like, it's out of the equation. I don't need to make any money right now. But what it has helped me do is just execute my plan, find good setups, and watch it play through. Like, watch it. Like, all I'm needing like now is experience. I've watched enough videos, I've watched enough lectures, I've taken enough notes. I've you know, like, I have what I need. I already have more than enough to be successful in trading. Now it's really just me versus me being able to execute when I need to execute, and me being able to identify when not to trade. That's all it is, and that I can't rush that. That just takes experience. It's like asking like a kid to watch like an NFL football player for like a year straight, his film and his drills and everything, and then at a certain point he learns enough to where he has the tools to go out and be good, but he's never going to be good unless he goes out and practices and actually does the physical work. Here, this is what I'm doing now. And what's exciting about all this is there's hundreds of different trading strategies out there, hundreds of different concepts. Maybe not hundreds, but there's a lot. Probably is hundreds. See how I outlined that white line there? See that wick? It's a green wick, which is green is bullish. And I take a partial here off. I actually wish I didn't take it off there. That to me shows me you're not really that confident in what you know. You know it's gonna go up because, I know it's gonna go up because when bodies build around the midpoint of a wick, almost always you can anticipate expansion in the direction of that wick. So that wick was an up close candle. Bodies are building around the midpoint of that wick. So I know that I can anticipate upwards movement. But that partial there, it tells me you need more experience. You need to see this more because clearly I don't trust it that much. In my mind, I know I can expect expansion upwards, but yeah, I took a partial off. Either way, good risk management. Like, if you're not comfortable in a trade, then reduce the risk. Like, it's simple. See there, outlining that, how the bodies are building upon that. So there's two things lining up here. There's bodies respecting the upper quadrant of the fair value gap I outlined there, just right below that white line that the bodies are building on. And there's bodies building on the consequent encroachment of that wick. So you'll see here in a second how it expands. So that is what helps you hold on to the trade. If I didn't have any of this here, imagine how lost you'd be. You'd kind of be like, why? Like, why is price doing this? Like, why is it going sideways? It was just going up a lot, and now it's going sideways. But the fact that I have these concepts already like in my mind, I may not be the most professional, or I may not even be like a super good reader of price action or market sentiment, but what's exciting is that what I have learned works. So all I need to do now is practice and practice and practice because I know it works. All I need is experience under my belt. It's like when a black belt teaches a white belt. He knows the shit. He knows his shit works, but he's not gonna be, super good at executing it until he practices. This is just like anything else in life. None of this is luck. None of this is fucking, guessing. Like, it's just stone cold hard facts right in front of your face. Look, like, that's not random. So that would have been a better place to take a partial there. But it's just something to learn. I'm learning something every single trading session. I come here, I look back, I make the video, and I learn even more when I review it like this. So here I'm measuring out, trying to see if I can get 75%. If I recall correctly, I don't think I get it, but I keep getting close. Or maybe I do get it and I don't take the partial. I don't know. One or two happens here. But yeah. Already I've minimized the risk. I've already made money. I don't know how much money it was, but like, what I'm happy about is that I managed the trade like a G. Really. That's the only way I can put it. And so here it's stuck in a PD rate. You never want to see like price stuck in a PD rate. It just means like it's not very strong. It's not really. If you're anticipating, it goes both ways. If you're anticipating price to go down and it keeps getting stuck in PD rays, it's not really, it's not fun. because you gotta wait. I mean, this is one trade that's already gone on for 15 minutes, you know, which really isn't a long time. Some people trade over days, but me as a day trader, I want to be in here. I want to be able to come in here, sit down for 2 hours, find one good setup, and just leave. You know, one good setup that takes 10 minutes. But you just gotta have a sharp eye out there, you know. I don't want to have to be glued to a screen for so long. But yeah, after this it's kind of bland. I mean, you still see the trade working out in my favor, but just so much resistance. It's kind of annoying, honestly. Like these other days, I feel like I'm gonna end up wanting to avoid. Remember, I already took the bread off the plate. You feel me? I already took 2 contracts off. Now I'm just watching the trade pan out. Now I'm just in here for the experience. You feel me? I'm just kidding. But yeah, that doesn't really mean, like, just because it doesn't hit my target doesn't mean I was wrong. Because later in the day, price 100% goes up there, but it doesn't have to do it, like right now. It definitely was a good draw on liquidity. And then when it starts to go under like that, I don't really like that. How it goes under the consequent encroachment, the fair value gap. If it's really, really strong, it'll stay above the upper quadrant. But yeah, I have another video that was pretty good. But yeah, here I'm just really just seeing. I mean, I have minimal risk on the table. If price did decide to shoot down, I only have a couple $100 after taking, a couple. I think it goes around like $1,600. But that's not the case. That doesn't happen here. It just I believe it retraces a little bit, and then I take it off the table once it drops below one of these PD arrays. See how it's reacting off the levels though, like yeah, gonna be moving out of this room in a bit. It's kind of lame. I guess we're going to nice rooms for a couple days, and then I'll be right back here. See, I'm trying to zoom in here because it's really important. See if it closes like below that. I don't like that. Had some reaction off the bottom, but I'm just watching real closely. I close out the trade completely pretty soon. With the decent. But yeah, I've been trying to get in front of the charts. I finally got my Wi-Fi back. Just trying to watch price every night as best I can. And I think here, you see how the bodies failed to like close the gap going up. That's also indicative that price is gonna continue to go down a little bit. I think you'll see right here. Oh, the video ends. I'm just kidding. About to make another video now. No, yeah. So I would have taken the last contract off at the 75 mark. Didn't hit it. price going pretty sideways now. It's not looking too hot for anything right now, anything long at least. Especially because I minimized my stop, so I kind of cut the breathing room out of the trade. Let's see what that body does. I think I can't remember, but it's like really struggling to get above that PD array. So the fact that I didn't lay any bodies on top of it, that kind of showed me like, yeah, it's gonna take out people who have long positions, because you know, if I'm a price engine, before I continue to go any higher, I'm gonna go out and stop some people out for sure before I continue to go up, and that's what it seems to want to be doing right now. I do close the position. I think once it leaves this PD array in a hurry, which for me that's displacement, which tells me yeah bitch, we're gonna go lower. So like that right there, that's displacement from the PD array. That's like lunging away from it too fast, and I just don't like it. I don't like how price is going sideways. I don't like how it's so high resistance, so I do end up closing the position. I should close it pretty soon here. Shit, I've already done it. See, I think this is me trying to hold on to like try and be right, but that's just bad. That's bad to go. Bad to go, brother. So I think here, if it dips into this P array again, then you're kind of like, all right, you're cooked. You're cooked. Wait, did I not record me closing it? Nah, I must have. Yeah, still got a minute. But yeah, that's pretty much it for this video. Pretty good learning experience, pretty good trade management, risk management all around. Not upset that my target didn't get it hit on video, you know, like, I don't give a fuck. I am wondering if I should have closed. Yeah, there we go. Wait, what? I'm so confused. Anyways, hope you guys enjoyed the video. Learned something. I know I did. Not a bad trade. Not bad at all. Peace.